Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. Let's begin with the Fed because tonight in New York we learned that President Trump is removing Governor Lisa Cook effective immediately. You might recall last Friday Trump said he would fire Cook if she did not resign over accusations about alleged mortgage fraud. Needless to say, the dismissal of Cook will allow Trump to appoint a replacement that could sway interest rates lower. In the last session, we had global stock markets a bit on edge in front of the earnings Wednesday from NVIDIA, as well as the Fed's preferred measure of inflation. That's due Friday when we get the PCE. And in a moment, we'll check in with Mary Ann Bartels. She is the chief investment strategist at Sanctuary Wealth. Earlier today at the White House, South Korean President Lee Jae-myung met with President Trump for the first time in person. And prior to that meeting, Trump blasted South Korea for political instability. Well, needless to say, that had the potential to create a rocky visit. However, the two leaders voiced optimism on cooperation over North Korea, as well as security and even shipbuilding. Speaking later to reporters, Trump said his trade deal with South Korea will remain unchanged. That's despite a lobbying effort from Lee.
They had some problems with it, but we stuck to our guns. They're going to make the deal that they agreed to make. And he's a very good guy, a very good representative for South Korea. It's a very big trade deal. You know, it's the biggest deal they've ever made by far.
That's President Trump there. Now, if you remember, that trade deal agreed to last month has South Korean goods subject to a tariff of 15% here in the U.S. By the way, after the meeting, we learned that Korea Airlines is planning an order for more than 100 aircraft from Boeing. To help me take a closer look at what's happening at this hour in markets is Peter McGuire. He is a currency trader, also the CEO of Trading.com Australia. Peter is on the line from just outside Sydney. Thank you so much for making time to chat with me. Can I get your reaction to the breaking news that we have had on the dismissal of Fed Governor Lisa Cook effective immediately?
Yeah, good morning, Doug. Greetings from Sydney. I tell you what, it's hit everyone by surprise, certainly hit the dollar. And Lisa Cook dismissed, by the president. It's hard to really inhale that unprecedented removal of a governor, and being referred to the Department of Justice. So I think everyone's just in a little bit of a shell shock. It'll be interesting to see what impact it has naturally to dollar in Asia today. And then, you guys opening up for New York tonight, whether there's repercussions across bond markets and certainly equities.
I'm seeing a little bit of dollar weakness, and we've got a rally in the yen. U.S. yields, particularly at the short end, moving lower. I think the 2-year is off about 3 basis points at the moment at 369. Yeah. Do you put a lot of stock in Fed independence? Maybe that's a ridiculous question, but I want to get your take on the idea that an independent central bank is critical to the way in which markets function.
Yes, it is, and there's no doubting that, and that's been, very much in place for more than a century. So I think that's the general theme. Everyone's been, you go to business school, and that's what you learn, Doug. Regardless of the school, you get that body of thought across finance, and I've been a student of Professor Jerome Siegel, a good friend of you, and that's what they teach at the Wharton School. So that's my understanding as far as independence and the frameworks associated with it. And, I listen, I'll just diverge a little bit, but you listen to Scott Bessent, he's wanting 1.25 to 1.5 to 1.75%, and President Trump's wanting 200 to 300 basis points cut. So this is going to be very fascinating how this plays out leading into Christmas.
I'm wondering if there's a risk. We know that the labor market is slowing down a bit, but inflation may prove to be a little stubborn. Right now, the market's convinced, I think, maybe there's an 80% probability that we get a rate cut, 25 basis points in September, and perhaps another rate cut before the end of the year. Do you think the market may be a little too aggressive here in its thinking?
Well, it's hard to, futures are running nearly even at, yesterday they were nearly 90% probability, so that may be the course, the pathway forward. We're very conscious as far as non-farm payrolls. We're really, that stickiness as far as the CPI and PPI and the issues, I think moving forward, if you do get 2 rate cuts, then that probably is fairly baked in from the street. And that seems to be the general thought. But this has really, I think, changed the dimension. If this stacks up and Lisa Cook is removed, Governor Cook, then that changes, I think, the potential for even greater cuts sometime later in 25, early 26, Doug.
So before we get there, would you expect like a great deal more volatility in the foreign exchange, particularly where the dollar is concerned?
Absolutely. I mean, you're down 11% since in 8 months from President Trump came in, it was 110, I think. Now you're looking at 98, that US dollar index, it's been spanked down. And I would think that would be a continuation. If you see successive rate cuts, then that's only going to strip more out of the dollar. That would be my thoughts.
So one of the other things that happened during New York trading, we had a much weaker euro after the French prime minister called for a confidence vote. I think that would be September the 8th. When you look at price action in the euro vis-a-vis the greenback, what are you seeing?
116.50 at the moment, and it was 117. It's very choppy, and it's again had a huge run up from that 102, 103 handle going back since the start of the year. So you can't. I mean, it's just been one-way traffic, and maybe you've got a 120 possibility by early October if this continuation of we see a rate cut in September. I would think that would really push that US dollar further down. That'd raise the euro. And I think that's the play at the moment. But a lot of the smart money's already been earned over the last 8 months. If you traded one market and one market only, short dollar, long euro, you'd be rubbing your hands with glee, Doug.
Yeah, I've seen that. I'm curious about what your take is on the meeting that we had today at the White House between President Trump and South Korean President Lee Jae-myung. This was their first in-person meeting, and one of the things that occurred to me is that, yes, Trump did refuse to change terms of the tariff agreement with South Korea. They remained at 15%, but there seemed to be a lot of positivity in other areas of concern, notably the situation with North Korea. How do you look at the Korean won right now vis-a-vis the dollar?
Well, that's an interesting market again. First off, before I get to that, I think there's a lot of President Trump really wants to engage South Korea, both from a technology standpoint and from shipbuilding. And so could be very good for the US economy. As far as the won's concerned, I wouldn't be surprised to see a little bit further leg up if that US dollar continues to slide. Keep an eye on it. I mean, you've only got to look at what's happening with the Kosdaq. It's been not a bad market to trade so far this year. And again, I think South Korea's best days, I understand the 15% tariff and what impact it'll probably have, but I think the overall relationship with the states has been galvanized. And then you're looking at what's I've read some thoughts as far as what's happening with North Korea, and that's again a very much a work in progress. And is that the ultimate strategy of President Trump, to try and get a truce between both sides?
So I mentioned that we are seeing a bid in the Japanese yen at 147.10 on the news of the removal of Governor Lisa Cook. What's your sense of the Japanese yen vis-a-vis the greenback?
Well, you're 147. If we see a rate hike, and there's every chance you will before year end for the BOJ, I think that's what Governor Ueda is wanting. Well, that's going to force, I think, a stronger yen. You've got a weaker dollar, cutting rates. So I wouldn't be surprised to see the yen have another leg up from here. So, yeah, stronger yen, again, rolling into Christmas, weaker dollar. It's, again, a great market to trade. It's been very, very dynamic over the last 8 months, and I don't think that volatility has been stripped out of it yet, Doug.
Stronger than 145 from here, do you think?
Yeah, I wouldn't be surprised. I mean, if you raise rates, and if that's what the situation is, and that's pretty much baked in, I think everyone's working along that sort of framework. As far as Governor Ueda, the optimism about another rate hike soon, conditions are favourable on interest hikes as wages rise and labour markets improve. So it's about a 70% chance, Doug, of a BOJ have another rate hike by the end of the year, and you've got accelerating CPIs that make that probability higher. So I think, 142 could be the new handle.
Wow. Okay, Peter, always a pleasure. Thank you so much. Currency trader Peter McGuire. He's also the CEO of Trading.com Australia, joining from just outside Sydney here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. We're seeing some dollar weakness this morning, and gold is moving higher. All of this after President Trump announced the removal of Fed Governor Lisa Cook. And this is raising concern about a number of things, not the least of which is independence of the central bank. Meantime, stocks were already under pressure after initial optimism about the Fed lowering interest rates. That seemed to vanish a little bit today. For a closer look at market action, let's bring in Mary Ann Bartels. She is the Chief Investment Strategist at Sanctuary Wealth. Mary Ann, thank you so much for making time to chat with me. So we heard last Friday from Fed Chair Jay Powell. Seems like the door is open for at least a 25 basis point rate cut. Do you think there's an outside chance we get maybe as much as 50 basis points in easing?
I don't think it's 50. In fact, I was really surprised that Powell pivoted. The economy is growing well. The inflation data is a little bit elevated. We're still at full employment. This is not typically the type of environment that we would see interest rates to come down, but he definitely did pivot in his speech. And what that tells me is that's going to allow risk assets to continue to go up. And I think we're going to continue to see equities hit new record all-time highs. Now, I wouldn't be surprised if we got some volatility as we go into September and October, but I think if we were having this conversation towards the end of December, we're going to be sitting at records.
So at the end of the week, we get the Personal Consumption Expenditures Price Index. We know this to be the Fed's preferred measure of inflation. That core PCE number is expected to show an annual increase of 2.9%. That seems hot, does it not?
I 100% agree with you. The Fed has been very consistent in saying that their target is 2%, yet we're not at that 2%. So I'm kind of surprised that Powell actually did pivot to a more dovish tone, but it is what it is.
So do you think we're entering a world now where the focus clearly is going to be the labor market and inflation takes a backseat? And if that, in fact, is the case, is that a little, I don't want to say a dangerous scenario, but it certainly will be tricky for the Fed to navigate?
Definitely tricky for the Fed to navigate. But if we get a hot inflation number, that could be part of the catalyst of how we have a correction. Because then the market's going to assume that the Fed's not going to be able to cut interest rates. And we've had this environment before, rate cut on, rate cut off. At the end, I don't think the market needs a rate cut to rally because earnings have been so strong. If you looked at earnings for the second quarter, they came in substantially higher than expected and really strong in the tech and tech-related area. So, I think inflation data could cause more volatility than anything else. Speaking
of tech, I think we can agree we've got a major test this week, Wednesday after the bell, when we hear from NVIDIA. Key question is whether this company can deliver results and issue an outlook to support a valuation of 40 times forward earnings. What's your sense here?
Well, normally, if you were talking about 40 times earnings, you would say that's high. But believe it or not, for NVIDIA, that's low based on history. They can come out with great numbers, great forecast. And I still wouldn't be surprised if the stock had some volatility and you had a little bit of a pullback. Markets are very overbought. NVIDIA's stock technically is extended. But when I look at where the true leadership of the market is, it's in the semiconductors, and that's been the case now for a few years. So even if NVIDIA was to have some volatility around earnings, I think if we're looking out a year, 2 years out, semiconductors are the place to be.
We had a meeting today at the White House between President Trump and South Korea's President Lee. One of the things that Trump refused to do was to change terms of the tariff agreement that he made with Seoul, 15% on South Korean goods. That will remain unchanged. Where are you right now in understanding the tariff story as it feeds into inflation?
Well, it can take time for tariffs to feed in. If you look at the Trump's previous administration, it can take, 6, 8 to 9 months before you start seeing a full impact. And again, this is part, I'm surprised again that Powell kind of pivoted because we haven't necessarily seen what the potential inflation impacts are from tariffs, and we don't have all the tariffs in place yet. But again, when I look at where we were in April and where we are today with all the tariff talk, the market has really been able to digest all of this news. And companies have been able to navigate an economy and a labor market and an interest rate environment where they're producing really good earnings. Now, it's in, certain pockets, like we've talked about. You're really seeing the bigger strength in technology, and that's because we're in a major technological innovation upgrade in terms of technology. And whether you're talking about AI, robotics, blockchain, even crypto, this is a major transformation across global markets. And you're actually seeing companies navigate this very well, where their profit margins are growing and their earnings are growing. Again, concentrated, but it's supporting the higher valuations within the markets.
So we know historically that the months of September and October can be pretty volatile, to say the least, for the equity markets, particularly here in the U.S. And I'm wondering whether or not you're on high alert for maybe a little bit more volatility and perhaps a substantial pullback in the months ahead.
I mean, we could get a 10% pullback. And given, the move that we've had so far, that would be very normal. What's interesting is October is really the month where we make great bottoms that start the rallies that go into November and December. So I am on high alert. I would not be surprised if we get some type of pullback, somewhere between 5 and 10%. And that would allow the markets to have a seasonal year-end rally.
So there was a bit of a rotation today out of value, and particularly some of the consumer staples names that were up big in the Friday session of last week. What is your sense of where the American consumer is right now, particularly given this inflationary pressure that we just laid out that may be coming from the tariff story?
It's a great question, because the question is really what kind of balance sheet and income is the consumer having? And the low end consumer is struggling, but the average consumer is doing very well. When we look at disposable income is rising. The savings rate is rising. And when we look at the consumer per capita income, it's rising. So the consumer is still solid. And that's a really important question, because they really have a significant impact on the economy. And there has been a major structural change where we were a goods producing economy, and now we're really a service economy. And the consumer is picking and choosing what services they want. So you're seeing, during the holiday season, summer season, travel has done very well. Restaurants have done very well, and they've slowed down and they've picked back up. Certain retail stores are doing okay. Certain retail stores are not doing okay. But when we look at the net, even wages are going up on average. So when you take an average profile of the consumer is totally fine. Okay,
Mary Ann, good stuff. We'll leave it there. Thanks so much. Mary Ann Bartels, Chief Investment Strategist at Sanctuary Wealth, joining us here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.